everybody, thanks for joining us for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. Well, optimism abounds in the cattle industry right now. Just about everything is higher. Futures, fed cattle, feeders, breads, weigh-ups, bulls. Everything moving higher right now. A lot of optimism. The concerns, I'd say, would have to be how the moisture situation is going to shape up as we move into spring. It's been a pretty open winter for most areas. And of course, input costs that have been a burr in our sides for a lot of the last couple of years. Today, we're going to try to dive into most of those markets. We'll also talk about CattleFax's updated outlook that they presented at the NCBA convention in February, and we'll touch on a few concerning factors from the Census of Agriculture released this past month. First, I want to thank the sponsor of our report, Nutrilix. With the added stress of the recent winter storms and calving gearing up for producers, Nutrilix can provide a solution to your feeding problems. Get more out of what you already have with liquid supplement delivered to you by your trusted local dealer. Give those calves a head start before they hit the ground, all while eliminating another stressor from your plate. Well, let's start out here looking at the feeder futures. That's probably been the most exciting and optimistic factor in the market right now. They continue to churn higher. It'll look like it's going to start to slow down and we'll see some profit taken out of the feeders, but then they just kick back into a higher gear. Since the start of the year, we're talking feeder cattle that are up $30, and really they're at their highest level since mid-October. The spread has narrowed between the fall contracts and the spot, but we're still talking a $17 premium, meaning the board thinks this market is going up by more than $100 a head. Now, couple that feeder board with what we're seeing in the corn market, and it's really moving in the ranchers' favor. Multiple times in February, corn set new contract lows. Actually, we saw the spot contract dip below $4 for the first time since November of 2020. A year ago, corn was priced at $6.42 a bushel. Right now, we're looking at $4.07. That's down more than 60 cents from the start of the year. USDA had their ag outlook forum and said that we're going to see reduced corn acres this year, but a return to trendline yields would mean more corn on the market, more supply, and less livestock to consume that supply. It's a picture that feed yards really like the look of, as they see costs of gain coming down, kind of helps them to pencil some of these real expensive feeder cattle that they're buying. On a cash basis, feed yards estimated to be about a break even. If they've got any price protection, they're probably making some good money. Packers forecast to be losing $100 a head though, so we've seen chain speed slow down and the kill reduced actually, excuse me. I want to move back to the futures though before we get too far ahead of ourselves here. Live cattle also moving higher this year. Since the start of the year, we've got live cattle futures up about $17 on that April contract. That's about a $250 per head gain. Similar to the feeders, every live cattle contract has been working higher as well. Nearby contracts seeing the biggest increases, but if you go out to 2025, we're over $1.90 on some of these contracts. Could find our way over $200 a hundredweight before everything is said and done. As we look what to expect in the spring on this market, we're going to see cattle feeders probably maintain their leverage over packers just with the tighter supplies of harvest-ready fed cattle. That's probably going to allow this cash market to grind higher over the next 60 days. Now, the cash-fed cattle have been higher so far. In February, we were $6, $7, $8 higher on the live sales, mostly $180 to $183. Dress trade from $290 to $292, that was $13 to $15 higher. Now, as we look what to expect in the spring, that's probably when the highs are going to be found in the cash-fed cattle market. Could get up into the 190s on the live cattle by the end of April. And on a dress basis, we could get up over $300. So a lot of optimism here. Now, on the boxed beef side of things, kind of just been holding steady. The choice cutout up over $3 a pound again, but really mostly flat, which is kind of a win of itself for cattlemen because consumers are still battling inflation, credit card debt that's rising. So to be able to say beef demand is holding steady is actually just what we need with a reduced supply of cattle. Now, we did get the cattle on feed report here pretty recently, and that was a mixed bag. Inventory and marketing's coming in right where they were expected to. Marketing's almost exactly steady with a year ago. Inventory up just slightly, but placements are definitely where it got interesting. Placements are actually forecast to be down 12%. That was the average guess, which would have been the tightest in 17 years. Some analysts were estimating it to be nearly 20% lower. But when the dust settled, we came in 7% lower than last year on the placements, which is moving down, of course, but not near what the industry expected. So coming back from the report, the futures board did open lower. We are still seeing these supplies tightening. It's just not going to be as aggressive as we hope sometimes. Now, before we get to our auction markets, I do want to touch on a couple of highlights or maybe lowlights from the latest Census of Agriculture. That comes out every 5 years and tons of data on the industry. Now, for the cattle business, it confirms some things that many of us have already known. The beef industry continues to shrink and consolidate. 100,000 operations were lost out of the cattle industry over the last 5 years. Since 1997, down 277,000. Now, it's mostly these smaller operations that we're seeing exit the business, less than 100 head, but hopefully this higher market environment will encourage producers to stay in the business. We did see an 11% bump in beginning producers, so that's positive to be able to say, but with this high market environment and the average age of the producer continuing to increase, going from 57.5 years old to 58.1, that means some producers could take this opportunity to retire. Now, as we move into our local auction markets, boy, the feeder market continuing to push higher over the last month. The best demand for cattle to develop into yearlings, and we've seen a lot of the replacement heifer buyers having to compete with the feeder buyers, and of course just not being able to be as picky because there aren't as many cattle for sale. Prices 70 cents to $1 higher from what we saw at this time last year. Light 5-weight steers at Pays topped out at $350. The upper 5-weights $318 to $335. In Torrington, your lighter 6-weights $299 to $325. Upper 6-weights $291 to $304. Now, one factor to watch here as we move deeper into this part of the cattle cycle are going to be replacement heifer numbers. They were down 1.4% from a year ago in the cattle inventory report, the tightest level since 1950. Now, depending on how the moisture and grass situation shapes up, we could see some heifers moving from feeding to breeding channels, but we're still going to be tight, both replacements and bred heifers. Now, with a 70-year low in those replacement numbers, we're probably going to see a much slower rebuild of the cow herd because we just don't have those heifers in the system. But that's not slowing anybody down from buying bred cattle. Boy, that bred cow market's strong this past month. As we look at, the public auction yards held the Blue Ribbon 2 sale and just a bunch of really premier auctions throughout the region. Wow, some strong prices, $300 to $400 higher from December on these bred heifers, and most of the cows $400 to $700 per head higher just from the December Blue Ribbon sale. Those bred heifers topping out at $3,100. Running age cows exceptionally strong, $1,900 to $2,300. Be easy to say, like, wow, this market's getting so hot, are we too high? But when we're talking calves that could be worth $1,800, $1,900 a head this fall, it's tough to say we're oversold on this market. The weigh-up market has been exceptionally strong as well, whether they're going to feed, slaughter, or being turned out to rebreed again. In Miles City, we saw those weigh-ups from 109 to 114, heiferettes 146 to 212. A lot of bull sales happening. We're definitely picking into that busy part of the season. Just a couple of highlights from some of our recent sales that we're looking at. Van Dyke Angus averaged over $8,000 on their bulls, up 30% on the average from last year. Gateway Simmental averaging $69.34, and Schaff Angus Valley at nearly a $12,000 average. Looking to the lamb market, we did see prices slide back a bit in February, but a lot of demand for the bred ewes. Young bred ewes at Pays selling $250 to $350 a head. A lot of the running age ewes, $130 up to $185. And wrapping up here with CattleFax's updated price outlook that they presented at the NCBA convention, they said the bulk of the price increase is probably behind us now, but they still said steer calves going to be up another 10%, an average of $290 this year. That's up $28 a hundredweight from last year. Yearlings up $20 they forecast at $240. The fed cattle is supposed to be at $184. That's $9 higher. And as we look at the slaughter cows, up 16 cents at $1.15, driven by strong demand for lean beef and, of course, less cows being culled this year with as much as we've liquidated over the past couple of years. Well, that's going to do it for this month's report. Thanks so much for joining us. Hope the spring gets off to a great start for you. From the Northern Ag Network, I'm Colter Brown.